Hey guys, so this is how I made $531 on gold last night at Asia Open, which is 8 o'clock p.m. Here's the execution. As you can tell here, I had sold 5 contracts at this level, realized that I had risked a bit too much, and then took off 2 at this level, and then obviously selling 3 at this key level that I had marked out. Obviously, I had nailed it because after just pumping a bit more lower, it kind of reversed higher. And we'll see that it actually goes past this. So great analysis on my part. Let me just delete this and then get to the analytical part. Overall, if you're not updated, gold has been on an uptrend, like a crazy uptrend, right? Like we're talking like people are probably making generational wealth off this bull run. Regardless, if we're looking at like the 4 hour, the 1 hour, we can clearly see that we had sweep liquidity here, right? Sweep this level. This is technically all-time high right here, and then we've been pushing lower since then. We have broken structure here. We pushed beyond this level right here as well. So although I've had some great trades going long on gold, today I was, or at least last night, I was looking for shorts. When we go down to the lower time frame, see right here, we could see that price had left on gold this clear level. It's almost like relative equal lows. Usually when price has relative equal lows, this is a great area to target, right? Price doesn't want to leave these levels. Okay, these are manufactured levels. Um, Regardless, I had taken a conservative TP, right? My TP was a no wick. Okay, I wanted to talk about the TP first because how crucial it is to understand candles that have no wick. Okay, if we take a look at literally any of these candles, right? Maybe this one, but like 95% of them or 99% of them have both higher and lower wicks, right? Even if it's tiny. See, this one does not, this one does not, this one does not. But out of the majority population of these candles, we're talking like 99% have both higher and lower wicks. Now, what does that mean for us? That means that these are great areas to target, okay? Prices left out this area essentially and is being attracted to this level, right? So it's a great TP. So when we go down, actually, sorry, if we stay at the 15-minute, we see that we have a 15-minute gap here, but also a 15-minute gap right here as well. Let's mark it out like that. Let's go replay right here. Nice. So when I hopped on, price had kind of been consolidating between this 15-minute gap and this 15-minute gap, right? This is technically, yeah, this is 7:45, okay? Why am I waiting for 8 o'clock p.m.? Why? Because 8 o'clock p.m. is Asia session open, okay? What does that mean for us? It means that there's an influx of volume coming in compared to how price was previously. So price is receiving buy orders and sell orders, right, at a more increased frequency at 8 o'clock p.m. Okay, why would I get into a trade before 8 if I don't know where price wants to go, right? I don't understand. Levels haven't been taken out. It's very low probable if I'm taking a trade before Asia session open, right? So when I wait for Asia session open, so 8:59, if we go to the next candle, see what happens. Okay, before even that, we have these levels marked off, okay? We're clearly consolidating. This is the high of the consolidation, this is the low, and both high and low are in both two different fair value gaps. This one's a bullish one, this one's a bearish one. Okay, price clearly opens up, goes lower. Let's see what happens after. Okay, comes higher. Okay, I'm not taking a trade at this point. Okay, I see prices trying to go for this level. Okay, it wicks it. Okay, wicks it. This is a good sign if you want to go short. Okay, it stops, stops. Okay, still hasn't inversed this gap, which is usually my entry model. Okay, let's look. Still hasn't. Boom. That's my entry. Okay, I'm setting my stop loss right there, and I'm taking it all the way to this no wick. All right. At this point, I'd drawn this level, this trend right here, and when price came down towards it, right here, when it tapped it like this, I went break even. Okay, I'm risk off. I'm no longer losing in this trade, right? And I'm expecting it to take out this immediate low, but also take out this no wick right here, right? Which also looks like there is a volume imbalance there. A volume imbalance is essentially just a gap between candles, right? It's another way of uh, like another way that another level that price is attracted to essentially, right? That being said, once I'm risk off here, you could just tell it just boom. All right, takes out my level. I don't even care that it goes lower. I've like literally no concern. This was my conservative setup, right? I'm trading out of my usual hours. I'm trading at Asia. I'm trading gold, which is not my usual asset. I'm going to be a bit more conservative, which is why at the beginning when I showed my executions, you saw that I took off immediately. I took off those two contracts because I was like, this is too much size, right? If it was Nasdaq, I would have been okay with the size, but I wasn't, right? So it's you got to make sure what you're comfortable with and manage your risk effectively, right? Typically, you would have wanted to go break even here, right? Once price broke through this level, you can go break even. But because I saw that there was a trend here, and it's Asia, and Asia's like you never know with Asia. Once price hit here, I'm risk off. So yeah. Anyways, that is my analysis for this gold trade that I'd taken on October 22nd. However, this counts for October 23rd's P&L. And I didn't take any trades this morning on NASDAQ. I didn't like anything, one, and two, I had already took a dub like with this trade. So I didn't want to hurt the P&L, even though I'm pretty happy with it, right? I only risked 200 and I don't want to risk anymore. But yeah, if you guys have any questions about this setup, let me know. Please like, comment, subscribe, and looking forward to making more videos like this.